This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Dozens of ships carrying liquefied natural gas, LNG, circling off the coasts of Spain unable to secure slots to unload have prompted grid operators for the country to warn they may have to suspend loading to deal with this exceptional situation. Europe is facing an energy supply squeeze as Russia has progressively cut gas flows after the West imposed sanctions in response to Russia's invasion of Ukraine in late February. The region has had to find alternative supplies, including LNG, but the arrival of multiple cargoes of the superkilled fuel has exposed Europe's lack of regasification capacity, as plants that convert the seaborne fuel back to gas are operating at maximum limit.
Oil prices were stable on Tuesday as the market balanced cuts to OPEC plus production quotas against fears of economic slowdown and lower Chinese fuel demand. Brent crude futures eased by 7 cents, or 0.08%, to $91.55 a barrel by 11:27 GMT, while U.S. West Texas Intermediate (WTI) crude futures were down 12 cents, or 0.14%, at $85.34. WTI had risen earlier by more than $1 a barrel on a weaker dollar, which makes oil cheaper for buyers holding other currencies.
Moving on to the top news in the energy sector.
Oilfield service firms are poised to deliver the strongest third-quarter results in years as demand for equipment and services has risen despite supply chain snags and higher costs from inflation, according to analyst forecasts. Schlumberger, Halliburton and others have struggled to regain pricing power after a 2016 price drop. The oil market crash during the pandemic in 2020 stifled hopes for a rebound. The lack of spending on new equipment left the market for drilling and fracking tight this year as oil prices surged and companies ran out of older gear they could cannibalize for parts. Oil prices remain near their highest levels in about 8 years, spurring more producer demand for services.
The European Commission proposed another set of emergency measures on Tuesday to tackle high energy prices, but steered clear of an immediate cap on gas prices as EU countries remain split over the idea. The proposals, which need approval from European Union member states, are the bloc's latest effort to address the spike in energy prices and fuel supply crunch that have gripped Europe after Russia cut gas flows since invading Ukraine. The measures did not include an immediate gas price cap, which most EU countries say they want. But the Commission asked for EU countries' approval to draft a proposal to set a temporary maximum dynamic price on gas trades at the Title Transfer Facility, TTF, Dutch gas hub, which serves as a benchmark price for European gas trading.
Next, we have the top news in metal markets.
Gold prices edged higher on Tuesday as the dollar crept lower, although bets of another big interest rate hike from the U.S. Federal Reserve weighed on the non-yielding metal's appeal and capped its gains. Spot gold was up 0.4% at $1,655.66 per ounce by 12:35 GMT, while U.S. gold futures were down 0.2% to $1,660.70. Any gain in gold is temporary, until the market anticipates the Fed to slow down its tightening pace, said Giovanni Stornovo, a commodity analyst at UBS.
Copper prices weakened on Tuesday, pressured by investor disappointment that China failed to ease its strict COVID-19 policy and as a global economic downturn dampens metals demand. 3-month copper on the London Metal Exchange, LME, fell 1% to $7,489 a ton in official open outcry trading. Copper has given up 30% since touching a record peak in March but has largely held in a range between $7,200 and $8,000 since the end of August. We will now look at the top news in the agricultural sector. China's soybean stocks are set to tighten further as delays in shipments from the United States deepen shortages of key animal feed ingredient soy meal, keeping prices at record highs. Ships carrying up to 3 million tons of U.S. soybeans which were scheduled to arrive this month and in November are likely to get delayed by about 15 to 20 days, 2 soybean traders told Reuters. While U.S. cargo delays are likely to weigh on benchmark Chicago soybean futures, Tight soymeal supplies will buoy Chinese hog prices. Prices in Guangdong, one of China's largest pork-consuming regions, hit 1.5-year highs this week and have risen nearly 60% since March.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.